Right now, something unusual is happening in the global economy. Most people are not even aware of it. There is a silent countdown that has already begun, and according to global experts, the world may have only 8 weeks to avoid a serious economic disruption. This is not just a random prediction, it is based on a chain reaction that is already in motion. The signs are visible, but the realities are easy to ignore if you are not paying attention. To understand this, we need to look beyond stock charts and headlines. We need to focus on something more fundamental. That is oil. Oil is not just another commodity. It powers transportation, industries, and supply chains. When oil prices move, everything else starts moving with it. At the center of this situation is a narrow water route called the Strait of Hormuz. It may look small on the map, but it carries a huge portion of the world's oil supply. Every day, a significant share of global energy passes through this route. Now imagine what happens when that flow gets disrupted. Supply tightens, uncertainty increases, and prices begin to rise faster than expected. That is exactly what is happening right now. Shipments are delayed, supply chains are under pressure, and oil prices have already started climbing. But the real issue is not just rising prices. The real issue is time. The global economy has a temporary safety cushion. These are strategic reserves. They are meant to handle short-term disruptions, but they do not last forever. Estimates suggest that these reserves can support demand only for a limited number of weeks. That is where the idea of an 8-week window comes in. If the situation does not improve within this period, the impact can become serious. Fuel prices will keep rising, transport costs will increase, and eventually, everyday goods will become more expensive. This is how inflation spreads. It starts with energy, then it moves across the entire economy. For investors, this creates a difficult situation. Normally, central banks reduce interest rates to support growth, but when inflation is high, they cannot do that easily. They are forced to keep interest rates high. This slows down borrowing and spending. At the same time, growth starts to weaken. This combination creates pressure on markets. It builds slowly, but the effects can be widespread. However, this is also where opportunities begin to appear. While many people react with fear, experienced investors start looking for patterns. They focus on where money is moving next. Right now, 2 areas are gaining attention globally. The first is energy, because when supply becomes critical, energy-related businesses become more important. The second is technology, especially artificial intelligence. Companies use AI to reduce costs and improve efficiency during uncertain times. This shift is not random. It reflects how money behaves during stress. It moves toward stability and efficiency. Now let's look at India. India is a major oil importer, so rising oil prices do create pressure. Fuel becomes expensive, inflation increases, but India today is stronger than before. The banking system is more stable, reserves are healthier, the overall system is more resilient. This means the situation is not just a crisis, it is also a selection phase. Some sectors will struggle in the short term, others will prepare for recovery. For example, sectors like FMCG and automobiles may face pressure, but these phases often create opportunities for long-term investors. The real difference lies in how people react. Many investors wait for clear signals, but by then, most of the opportunity is already gone. The smarter approach is to understand the shift early, to observe before reacting, to prepare instead of chasing. Over the next few weeks, the global economy can move in 2 directions. If supply improves, markets may stabilize, confidence can return, but if disruptions continue, the pressure will increase. We could see higher inflation, slower growth, and more volatility. This is why the current period is so important. It is not just another market phase, it is a turning point. For anyone interested in investing and financial growth, this is the time to stay alert. Not fearful, but aware. Now think about this for a moment. If you knew a major shift could happen in the next few weeks, would you ignore it, or would you prepare for it? Share your thoughts in the comments. It will be interesting to see how different people are thinking about this. And if you enjoy content that breaks down global events into simple financial insights, then make sure to follow and subscribe to WealthyKlicks. We bring you stories like this every single day, because sometimes the biggest advantage is not speed, it is awareness and knowing what matters before everyone else does.